Going on, everybody? How are we doing this evening? Give me a 1 in the chat if you can hear me okay. I want to make sure everything's working properly. Perfect. Thanks, Diego. Thanks, guys. Okay. Great. All right, you can hear me. So this live stream wanted to go over my trade from today. I had some questions regarding, why did you trade when we had such an expansion higher in London, right? So we have Asia, London, New York session, okay? And so we're gonna get right into it. I don't want this to be a super long video like most of my live streams. They're about an hour 30, hour 40 long. So we do these enough so where I can, pretty much move through it quick now. So I'm gonna do the trade recap first, and then we're gonna go through maybe some market maker, sell model, buy model concepts, and then we're gonna answer questions after that. So thanks for coming. I promise I won't keep this too long, and then I'm gonna try and get to everyone's questions, but please hold them towards the end so I can get to them. Thank you. So for me today, I always start the day by looking at the economic calendar, obviously, but there's no news today. So, or at least there's no high impact red folder news. And so the really only high time frame objectives I were looking at was the buy side above this high right here. And if you haven't noticed, I have a highlighter on my cursor that's new. So if you guys like that, let me know. I know sometimes it can be hard to follow the cursor. So I got that for y'all. So I was watching this level right here, which also happens to be pretty much the consequent encroachment of this wick right here, right? So kind of lines up both. So I just put the high for liquidity, which is basically 4,200. Okay. So it's a big figure number. I was watching that, and then obviously we're watching previous day high and low, which I had marked out here. But in the beginning of the day, right? So midnight open on this candle right here. Beginning of the day, quick drop down below this low, and this is pretty much Asia session right here. I can put the boxes on there if you guys want to see. Asia, and then we have a move up, right? And so if you notice, out of consolidation, if we're using the bodies, from this high to this low of the range, we come down, and about at equilibrium of the range, we're looking for an order block, right? So here's an order block right here. Can also be a breaker if you want to call it that. Let's get rid of the boxes. So around 50% of the range, equilibrium, there's an order block here, or a breaker, if you want to call it the breaker. I just saw it as an order block. So we hit that, right? And so that would be your buy point after you have the impulse swing. So we take out sell side and immediately go higher. So that's manipulation right there. And that is taking price higher, right? And where was it going towards? Well, it was, if you go to the 5 minute, right? Let's go back to the 15. So here's that order block right here that we marked out. Hits that and starts heading higher. And so I don't sit down at the charts until about 8:30. So the charts look like this for me, right? I didn't really sit down until 8:30. So this is what I saw. And so obviously you had a nice turtle soup here if you bought that, but I'm not awake at that hour. It's about midnight, right? I'm in bed at 10. So if you're trading in London, maybe you're trading, around 3 o'clock. That's when you're looking for the setup to form. 3:30 on the dot, you can be a buyer and ride this higher. And we ended up taking out this high over here on the 1 hour, which is right here, all the way over here. So maybe you're targeting that, right? And there's your trade for the day. But I'm not awake, obviously, so this is what I see when I wake up. So all this stuff is going through my head. I sit down, I saw this, saw the turtle soup, and I saw that London, we had an expansion. So I was expecting some chop in the New York AM session, which is the session I trade. So let's take that off. And so 8:30 opens, that's the news embargo lifts, but here we are, okay? And so I have this on the 5 minute when I sit down. And about this time right here on this candle, I was sitting here saying to myself, okay, well, we took buy side. We also took, we took a major buy side level right here. We've taken out the previous day's high and this day's high. And now it looks like we're pretty much in a deep premium. So when people at 9 o'clock or 8, whenever they sit down, right, when the news embargo lifts, what are they seeing this as? They're seeing this as a breakout, right? Because this looks like resistance, doesn't it? I mean, price, hits above here, right, but goes lower, big hard reject. They're seeing this as resistance. And so when we break out above it right here, they're thinking, oh, wow, we've broken out. Let me buy long, because they see this as strength. So that's one way to think about it, right? There's also people who have been shorting off this move, hoping for it to go lower, and their stops are probably going to be trailed above here, or right here maybe. So when this move happens, they're stopped out. And this might seem a lot of, very basic for a lot of you people who watch my stuff or are familiar with ICT, but I just want to go through the basics for the new people. So they see this as strength, they're buying that. Also, people who have sold short have to have buy stops above here because they had to protect themselves. So they're stopped out when we cross above these highs. So there's even more buy side liquidity injected into the market. And so this looks like a strength or a move, and buyers are going to, retail's going to see that as strength and they're going to buy it. So what is going to happen around 8:30 when everyone sits down, 9:30, everyone sits down, they're going to see, oh my God, we've been going up, up, up. They're going to want to chase the move. Well, look, in hindsight, obviously, this is what happened. But when you come over here, what I'm looking for is, okay, I'm anticipating a breaker to form. Or some sort of liquidity grab around 8:30 to 9:30 open, okay? So I always have midnight open marked out. There's midnight open. And then I always have 8:30 open marked out, which is this candle right there. Okay, so I've taught this in a previous live stream, but what does it mean? And this is something for you guys to answer for me. What does it mean when 8:30 open is above midnight open, right? And if we're bearish on the day, not saying I was bearish because I didn't really have a bias going into the day because, look, we've literally just been chopping in this range, right? So I honestly thought we were going to come up and tag 4205. Whether we're going to do it, really quickly or sluggishly in the morning, who knows? But I was looking for that to get tagged. But when I saw this move right here and the next candle, right? And the next candle. So we're kind of just chopping down. But then boom, right there, when that candle closed below this low or these relative equal lows, right? Right when I saw that, okay, I'm sitting here saying to myself, okay, maybe, we've already taken buy side, right? Yesterday's high, this high over here, which is this line. We've taken buy side, and we have this 3 drives pattern right here. Okay, so 1, 2, 3. What is this 3 drives pattern doing? What is it doing? Who can answer it for me? You have 1, 2, 3. Who can answer that for me? Anybody? Yeah, it's accumulation. But more specifically, what is it accumulating? Yeah, it's taking out buy side and it's engineering liquidity. So every time the market drops low like that, right? Because people think these are resistance levels, right? Every time the market drops like that, people are going short, right? People are going to go short trying to call top. So what are they doing? When it starts dropping right here, they're going short, placing a stop above this high. Well, when it drops and comes back through, right? It's taking them out because they have buy stops above there. So it's taking buy side. So it does it 1, 2, 3 times. So when we have that and we're near a potential, liquidity level that's major, like on that daily chart, remember, it's the daily buy side level. You don't have to come up and take out liquidity, right? It's already been engineered on this 3 drives pattern. So when you have that and you have this drop right here that confirms it with the market structure shift, and what you might be asking, well, there's a swing low right here. Isn't that a market structure shift? Yeah. But is it a significant one? Because look what price is really doing. When you zoom out off the 1 minute, guys, this is what price is doing, right? Up, down. Then that low is broken right there, right? I'm not marking out every single tiny swing low. I'm looking at the main structure of what's going on. I'm not looking at every single little candle, okay? I'm looking at the main structure of price. So you can filter that out. Stay off the 1 minute. You can filter it out, right? You don't want to be watching your entry time frame. You want to be zoomed out. So anyways, this is the 3 drives. We have this, and I'm thinking in my head, okay, we've hit this, and as we start trickling down and finally get this candle, I'm anticipating this low to be taken out. I'm anticipating for a breaker to form, okay? So why is this a breaker? Well, you have a high, a low, a higher high, right? And then price slams through that low, okay? And so what has that done? It's broken the spirits of the traders who went long here, because now they're underwater immediately. And it's broken the traders who went long here, right? So long right here, people who are long, they're stopped out. Same with the people right here who have trailed their stop. They're not out. They're now out. And so when price comes back to this level, right, you want to take the lowest down close candle, and that's your breaker, right? Well, why am I taking this candle and not this one? Well, this is the lowest one, right? But it's also the beefiest if you look at the body, okay? So a breaker is literally just this pattern right here. You have a high, a low, higher high, and then we slam through that low, okay? And then we're going to return to it and go lower, right? So if you want to get fancy, we can mark the same highs and lows that we have drawn here. And so this right here is this candle right here, this move down below this low. I'm just drawing it super simple for you guys. So there's your breaker, right? And you might be saying, okay, well, let's see what the next candle does. Well, look, there's no fair value gap there. Why can't I enter? You don't always have to enter on a fair value gap, guys. Let me make that clear. There doesn't have to be a fair value gap there. And if you go on a smaller time frame, there was, right? But on my entry time frame, I'm not looking at anything lower than a 5 minute. This is what I look at all day. 5 minute is the smallest time frame I look at right here on my big screen. 15 minute, 1 hour. And sometimes I'll toggle on the daily just to take a peek at what the daily candle's doing, or maybe the 4 hour, right? But this is pretty much it. It's that simple. So when we have this right here, when we have this, can I show my executions on here? I might have to get off. I don't think I can show executions on replay mode. Oh well. Anyways, I entered on this candle right here. So right when price comes back, and what I really liked about this that made me not have to wait for a fair value gap was that we closed below this low on a beefy down close candle. Okay, when we closed down here. That's what I really liked about it. And yeah, I was a little worried when the 15-minute candle closed like this, right? Because this is all you see on this candle right here. So when we came and closed back up like this, it almost looked like, you know, we were going to head higher. Because if you think about it, you have this fair value gap right here that we tapped into, okay? And if you want to pull from, I guess that wasn't discount yet, but there you go. If you pulled from that low, right, we're hitting the 50 to the tick. So that's something that made me a little nervous, but I was confident because of the market structure, right? There doesn't have to be fair value gap. And I did go on a 1 minute just to see on that move right there, was there a fair value gap formed? And there was. So that gave me a little confidence as well. But I'm not entering on the 1 minute. I'm using the 5 minute market structure. I don't want to get chopped up in this and have a super tight stop. So let's see here. We got about 75 people in here. Who can tell me where my stop should be on here? Because I entered right here at 41.9150 on the dot. So that would be this price right there. Okay. Let's delete this. Who can tell me where my stop should be? Everyone's saying above the breaker, above the breaker. So you're saying just above here? One tick above right there? Or for me, I like to put it above. So if the move is this, right? There's your breaker. High, low, higher, high, high, low, higher, high. And the move down, I like to put my stop above this candle right here, or above this swing high. Not even the top of this little breaker. You can put it, you know, above right here if you wanted to. That's super tight. I like to have at least a 5-handle stop. And this is only 3 handles almost. So I put mine 1 tick above this price right here. So that's what we have right here. So this is where my stop was, if you're looking at it in a simple view, okay? And so now I don't take trades that are smaller than 2R. So I'm picking targets. Where are my targets going to be? Well, let's zoom back out. Let's get rid of this. So now that I'm short, right? Now that I'm short on this candle and I have my stop, my risk is defined. I'm short 4 contracts, okay? So now let's pull from where the move started. Well, you have here to here. Let's go ahead and just do premium discount right there. So I'm at least going to take a partial below the 50, right? Well, if I do that for right here, it's not even a 2R trade. So either I can't take the trade or I have to hold for something longer, right? Or something lower. So let's get rid of that. Let's get rid of the buy side. Let's clean this up a little bit. Oops. Did not mean to do that. Breaker, and then the high. Let's keep it simple. This is literally all I was looking at. And also, I forgot to mention, I had this fair value gap drawn right here, which was actually an inverted fair value gap. So that was a nice little confluence as well. So if you don't have a fair value gap right here, you can use this one, right? Because look, it's supported price on this candle, these candles. Then we break below it, come up and hit it right here. Look at the reaction off that and the breaker. So I had that drawn out as well. But I got in right at the low of the breaker. Yeah, never force a risk reward. So what did I do, right? Well, I zoomed out on a 15-minute. Where has this move actually started? Not down here, but it started down here, especially on the 1 hour. So zoom out. Boom. What's the first pool of liquidity below this 50%? Well, it's going to be the swing low right here, right? Which is all the way down here. So now my risk is defined as, let's go ahead and mark this low as sell side liquidity, right? I hope you guys can see that. So now if I take a trade, 3.95R, right? Risking 5 handles to make almost 20. Here we go. So what I did was I had this level marked out in case we were using this dealing, with this dealing range right here. So when price came down and hit this level below, like it does, and obviously before it comes down, look how close. If you had put your stop above this little breaker candle right here, you would have been stopped out, okay? But also look what time it is right here in this candle. It's 9:30. It's volatile in the market. The market just opened. So you have to give your trades room to breathe. If I put it any shorter than this, I was confident because we were below the breaker. We're below this fair value gap. We're below 8:30 open, so I wanted my stop to at least be above 8:30 open, okay? So I put it above the swing high right here, the breaker swing high. And you can see, yes, it's scary when I'm short right here and price starts running against me, but I have room. I have 5 handles to give, right? And I've already accepted the loss in my head. I've already accepted that this might be a losing trade, so I'm not worried, okay? If you can't accept that before you hop in a trade, you need to reevaluate what you're doing. Either lower the size, go back to demo until it doesn't even affect you anymore. So let me move this over. This thing's being difficult. There we go. So we come up, no mohawks on that breaker, and then you see the move down, right? People are probably buying this, and I think a lot of people might have gotten tripped up thinking this was the Judas swing down, right? To grab sell side and then go higher. But you got to think in your head, what have we been doing this whole time? We've been running up, up, up. This looks like a smart money reversal up here to me. This is where the market maker sell model comes in. Okay, let me get rid of this or move it over some. This is where the market maker sell model comes in, because we have your original accumulation right here. Let's make that green. I guess if you really wanted to, you could just drag it like this, and this would be your first stage of accumulation. So this is your original consolidation. You have your accumulation. You have maybe a little smaller stage right here, and then one more right here. Okay. Up here, smart money reversal. And the thing that I like seeing the most in a smart money reversal, which is just this whole section up here, what I like seeing the most in a smart money reversal is a breaker, right? It's one of the strongest algorithmic patterns you can see, and that's why I like trading it. So when you have this, right, when you have the breaker form in a market maker sell model or buy model where it reverses at the top or bottom, I love seeing that. So when this came down here, we have buy side of the curve, right? And now I'm looking for sell side. Well, where's terminus going to be? It's going to be below the original consolidation down here. All this back and forth price action in Asia, remember? Asia's right here. I know it doesn't really line up that much, but I'm just looking at the candles, right? So I know this is about Asia session, and then we have the London expansion right here. And so what does London usually do? London typically makes the high or the low of the day. It's the manipulative move. Well, what did London do today? It basically made the high of the day, right? And so if we're bearish, that's the fake move. We want to be shorting that, okay? We're way above midnight open, and no one answered this for me. No one answered this question. What does it mean when 8:30 is above midnight open and we're bearish? Who can answer that for me? If no one can answer it, I'll explain it. Yeah, this technically was the Judas swing, right, for the daily range. Yes, Jamar got it. Super premium, extreme premium. When 8:30 open is above midnight open and we're bearish, we're in a deep, deep premium, right? So price is going to naturally want to return back to midnight open. We're in a deep premium. So I'm looking, so you have all these confluence points. You have a market maker sell model forming, smart money reversal with a breaker. We've had a 3 drives pattern, right? And these are all things I'm looking at when I sit down, right? And you can't, it's hard, you can't learn all this in a short video, guys. It's just years of experience, or months, years, whatever you want to say, just hours and hours of looking at the charts and watching it paint real time, right? And going and back testing. We've taken buy side, 3 drives. We're on this buy side of the curve now. So we have a breaker form, market structure shift. Let me get my light bulb out. Ding, ding, ding. Light bulb goes off in your head. Short the breaker like I did. And now when price came down below this level, right, below the 50% of this dealing range from here to here, from here to here, when price comes down and hits that 50%, just to make sure, what I did was, let's see, boom, right there. I didn't take any profit yet because we're not at my profit target, not even a 2R yet. What I did was I made sure to trail my stop back above this high right here, right? Or basically just put it at break even. What I didn't want was price to come back up and use this to go lower, right? Because if it did, it might have stopped me out. So I trailed my stop above the swing high, took some risk off, almost half the risk. Because it should, these candles right here should not be violated. Sorry if you can't see it. I might have it too zoomed out. But these candles should not be violated if price is going to go lower, right? These should reject price. You want to see up close candles rejecting price as if you're bearish, right? And you want to see the order flow continue to be bearish. So now we're on sell side of the curve. After this move right here, I knew I was on side, right? I knew I was on side when this move came down and broke this low, because now that that validated these two candles as bearish order blocks. So let's make this sell side. And so now I knew I was on side. I knew the market maker sell model was probably going to play out. And by the time we got down here, let's just say, I'm pretty sure I just trailed my stop to break even right here. I think I posted a screenshot on Twitter. You can go back and check it. So I'm break even now, risk-free trade. And my profit targets, how did I pick those? Well, let's get rid of some distractions here. Fib. Take the manipulative move that took the liquidity, right? Took the manipulative move. Let's project it down. So we have 1 standard deviation. Well, what does the 2 and 3, 2.5 mean, right? Those are good places for the market to want to either return back into a premium, right? And have a nice bounce, and a little bit of retracement to go lower. It could also be a reversal spot. So what I did was I looked for the liquidity pool closest to these areas, to these 2 levels right here, right? I looked for liquidity closest to these fibs. So what's the closest one? Well, let's look to the left. This low right here. You have sell side below this low. Let's get rid of this now that you know where I've entered. So let's see what happens. Next candle, boom, straight down. I took half off there. I have a sell limit order for the original consolidation down here. Below the original consolidation, I have one buy limit order to buy back out of my short position. So let's see what happens when price takes out and hits these -2, -2.5 standard deviations. Right? You see how it starts stuttering there? You see how it starts retracing a bit back into the range? And obviously, boom, you have the next one that gets me in my profit. But you can see how these deviations work, right? So now I have one more. See, I can pull the tweet up. Actually, it has my original executions on there, and obviously I'll show the executions after we're going through the trade. Here we go. This image right here. This is what I posted on Twitter. So I sold 2 below this low right here, and I had a sell limit order for this low right here. But what I ended up doing was I ended up actually taking one of those off and moved it even lower. Okay. So I took another one off below this low right here, the original consolidation low. So 2, took another one off. Now I'm still short one position up here. Sorry, one contract. And it was at 41.6450 down there. How did I get that level to take profit at? How did I get that level? 41.6450. Well, what's this level right here? 41.6450. Okay. Well, let's see what happens as we keep going lower, right? I'm still short one contract because we've taken out this low now. And we're still on the sell side of the curve. And if you zoom out on a 1 hour, clear all this off, you can see buy side of the curve, sell side of the curve, okay? And I'm still thinking we're going to come deeper into a discount, right? I know it's backwards, but below in this red area, I'm still thinking we're going to go drive deeper, okay? So you can see as we're down here below the sell side, I still have a limit order to buy back my last contract right there on that black line. And you see we start just hopping around, okay? So what I ended up doing was going on a 1 minute, and instead of just waiting, and this is about, I've been in the trade for about, let's see, got in on this candle. So I've been in the trade about 109 bars, 109 minutes. That's from basically 9:40 to 11:30. So it's almost lunchtime for me. I just decided, you know what? If we break this high right here, if we break this high, then I'm just going to hop out because I wanted to see it continue going lower and hitting my price target. And I knew if we broke this high, it was probably going to want to run these highs and maybe this high as well. And that could mean we could reverse and come back into this range right here. So I just took profit right here once we broke that high of my last contract. But let's see what happens now. Run those highs right here that I talked about. Hit midnight open. Tank down lower, right? To the tick, right? What's the low of this candle? Look top left. 41.6450. What's this? I guess it's kind of off if I go up and down like that. There we go. This level is 41.6450. Okay. And now let's see what happens the rest of the day. Boom. We're caught back up. This is live price action. To the tick, low of the day, -4 standard deviations. To the tick. So if I had not gotten stopped out, I would have taken profit at the very lowest point possible, right? That's algorithmic delivery right there. That's perfect. You can't get better than that. I know I sound like ICT saying that, but it's true. You can't get better than that. Low of the day, right there, negative standard forward deviations. Am I mad that I got stopped out? No. You can't sit here and waste your mental capital, right? Watching these moves. I had shit to do. I had to go to the gym. I got to make lunch. So let me just pop my order executions on here. There we go. So right there, sold 4. Right here, bought 2. I have 2 left. Bought 1 right here. And then got stopped out on the last one right here when I trailed my stop, where I explained above this high right here. Boom. Got stopped out right there. And then you see how price comes back. It's the low of the day to the tick right here. We just do that. There you go. And then we just kind of just chop around the rest of the evening, right? So I got my money, got my slice, went to the gym, didn't trade the rest of the day, and that's about it. That's what I'm looking to do every single day. That's what I'm looking to do every single week. And if you want to mark off the remainder of the sell model, we can do that real quick and then answer some questions for you guys. So this would be like your low risk sell, I guess, on the breaker. This would be your low risk sell. So let's mark that as a little bit of red. Okay. And obviously this is your smart money reversal. If you want, I can mark it in gray so you know. So you have, let's go ahead and label it out. Original consolidation. You got smart money reversal, or SMR. Accumulation, reaccumulation. Distribution, right? Because price comes up, returns to quote unquote support at the breaker, and then boom, levels off, down into original consolidation. Really doesn't give you a chance to get in there, right? And I know if you go on the 1 minute, you might be able to find something, okay? But I'll be honest, I don't even trade the 1 minute anymore. Shout out my boy Sniper, got me on the 5 minute. And ever since I've been on the 5 minute, all these right here, all these trades were all taken on a 5 minute chart or higher. All right? I can pull up every execution you want and show you. All these trades were taken on a 5 minute or higher. 15 minute, 5 minute, right? You don't have to be on the 1 minute to make good money, all right? Just because ICT's on the 1 minute, just because these people on social media trade in the 1 minute, doesn't mean you have to either. Everyone wants to be like ICT. Just be you, right? And so there's another little redistribution right here. And then you can see price heads lower, runs through that original consolidation. And then you basically have your new consolidation and terminus right here. So there's your, that's better on the 5 minute, isn't it? Yeah. So there's your market maker sell model. If you want to take a photo, be my guest. But I'm going to pull up the chat real quick. Sorry, I had it closed while I was going through everything. Let's see here. Is this real trader paper trading? This is paper trading. Let's see. Yeah, NQ setup not as clean. Any comment? So we can talk about some SMT. Let's do that real quick. Let's just remove everything off my chart. So on this setup, let's scroll over. ES is on the left, NQ is on the right. You can see time frames and symbols up here in the top right. So you have your 3 drives as well on NQ. But if you had your stop, right? If you had your stop right here, like you did on ES, you would have been stopped out. This is one of the reasons I don't trade NQ that much. The moves are more exaggerated. And you can also see that there was is a little bit stronger, right? Well, how do you know it's a little bit more stronger? Look at this low right here. Let's just make it blue. And then look at this low right here and this low, right? Lower low, higher low. So there was strength on NQ. So you don't want to short NQ when it's the stronger one. You want to short the weaker one, okay? So that's why I got in short on ES. Mainly, I trade ES anyways. I honestly can't even tell you the last time I traded NQ. But NQ is showing more strength here. So you don't want to you don't want to short NQ. You want to short ES. It's the weaker one. And if you pull up the Dow or YM, you have this high to this high. Well, you have this high to this high, right? Clear SMT between these two. So in my head, this was like kind of like a, if you don't see where we're going after this, you know, Dow is obviously the weakest one. ES, you know, short behind. And then NQ right here was the strongest of the 3. So you at least want to be shorting ES, or you could have shorted the Dow right here as well. But you know, ES is my bread and butter to trade. So I hope that helps with NQ. But for those of you all who don't know, I have a second monitor, and this is what's on my second monitor. It's literally just SMT. It's just dedicated to SMT. You have the Dow, NQ, ES, and then you have the dollar on the right. And the dollar's been kind of shitty lately. You can't tell. Filled in this big void right here. From here to here, I guess I would call this. I mean, here's a void. This whole move's pretty much a liquidity void. And then once we fill it in, you see how it starts chopping around. So wasn't really much help today. Hasn't been for a bit. Let's move this back over here. But that's how I basically knew to trade ES versus NQ. I know a lot of people like to trade NQ. If you're going to trade it, you got to be willing to hold through those volatile moves. The safest place to put your stop if you're going to trade this breaker, probably just above the swing high right here, right? But if you know what you're doing and you know what you're looking for, you can have a little bit tighter stop, okay? So entered right here. My stop is above this high right here. You could have put it above this one as well if you want to be really safe. I mean, even if I put it above here, 1 tick above 7 handles, and I was aiming for original consolidation, it's still a 2.8 hour trade. It's not bad. Instead of instead of selling short 4 contracts, I probably would have just had to sold 3. So would have made a little bit less money, but you would have been safer and had peace of mind instead of getting wicked out, you know, like you did right here on NQ. So sometimes you get wicked out. You can't really do anything about it. Okay, let's keep going through here. Hope that helps you, Benign. Do you trade on paper account or live account or funded account? I trade on paper and a personal account that's live. I'm not with any prop fund right now. I do not have any affiliation with one. The one thing you should know about me is whenever I say something, I mean, I'm going to do it, right? That's like one of my pet peeves. It's people who don't stand by their word. And for me, I'm not the type of person just to promote something just because someone has either asked me to or is, you know, trying to persuade me to do it. If you have to sit here and persuade me to promote your product or, you know, try and give me an incentive to, it's probably not that good, right? If you're in my DMs asking me to promote your product, that means it's not speaking for itself. And I'm not going to sit here and promote something that either I have not personally used in the past or I'm currently using. So I'm not going to promote a prop fund that I haven't used. And I've thought about getting a prop account. I've been looking at Trader T. He just opened up the Funded Engineer, which is a new prop firm that he started. I've been looking at that. I've also been looking at My Funded FX. And I'm just throwing out names, right, from prop firms I know. I've never used a prop firm account. I've never done a challenge. But that's something I might be looking into here soon. I've been kind of waiting to see what everyone else's opinions are of them, because I know there's some out there that are very predatory. So let's see here. Any other high time frame P arrays you were looking at? I'd say higher time frame. I mean, really just this high. This high over here and the 3 drives. I don't really get too. Yeah, I don't really see. I mean, here's a 4 hour. I mean, we did hit this fair value gap right here. Filled in this tiny ones, but we didn't get above the swing high, right? We couldn't break that swing high that I pointed out. So we filled in all these voids and then headed lower. So maybe if you were trying to get a turtle soup and anticipating the breaker to form on the sell model, you could have shorted right here on this 4 hour fair value gap fill. Let's just mark out the bottom as well. So boom, hits the fair value gap, consequent encroachment if you want to measure. You can see it, the body's respecting that consequent encroachment of the fair value gap right there. Busts through it, fills it in. No mohawks. And when I say no mohawks, that's just me quoting ICT. Think about when you're mowing the grass, right? When you're mowing the grass and you're going in straight lines, well, what do you do when you're mowing the grass? Well, you don't mow completely a new line, right? You go halfway over your old line in the grass, because you don't want to leave any mohawks, quote unquote, or lines where the grass has not been cut, right? You want to mow a little bit over top of your last lane that you were in. So that's what this is doing, right? And this is how the algorithm hides in plain sight. It doesn't stop on a dime at the fair value gap. It runs over it, right? And then comes lower. So that's why you got to leave your trade some wiggle room, right? You can't just be having a stop 1 tick above consequent encroachment. You can't just be having a stop 1 tick above a fair value gap. You need to leave wiggle room for prices to want to come up and leave no mohawks, okay? And that's why you see on that breaker that we pointed out right here. Let's make it full screen. That's why you see right here on the breaker, price comes up after closing below, runs up a little bit, a couple ticks above the breaker high, the breaker candle high. No mohawks, and then boom, tanks lower. So you need to have a little bit of wiggle room in your trades, especially if you're trading at what time? 9:30. This is 9:30 open on this candle right here. So you need to be aware of the time. You need to be aware of, the concept of no mohawks, and keep in mind that the algorithm is going to want to try and hide itself by running over the lines a bit and coloring outside the lines. So yeah, if you wanted to use this is just something I kind of saw right off the bat. This 4 hour imbalance, right? Doesn't take out the high, this high right here, but it does hit this imbalance, which is the last imbalance before the external liquidity above this high. So maybe that's something you saw. I didn't see that live though, so cool find. Let's go back to the 1 hour. How do you map out the standard deviation? It's literally just, I can give you my fib settings if you want. AM showed me these. That's why they're called AM projections, right? Just so I know which fib is which, because I do have my just regular projections fib, and it's just every 0.5 standard deviations. But if you want to screenshot this is literally all it is. 1, 0, -1, -2, -2.5, -4. And so the way you use it is you want to find the manipulative move that took liquidity before the move you were looking for, right? So if we're bearish, I want to find the move that grabbed liquidity before reversing, if we're trying to trade a reversal. So what's the move that did that? Well, it's going to be from this swing high, this swing low, or it could be from this swing low because they're equal, right? So you have the high, low, higher high. So we're going to take the low to the high. Let's just take this one since it's the last one before the move because they're the same. We're going to take our fib from here to the top. Sorry, if you're going to pull from that way, you got to pull from the top. What am I doing? Top to bottom, right? So from this high to this low, because it swept liquidity above this level right here. See the X? That's how I designate liquidity being swept. Sweep it, immediately turn back into the range, right? There's no displacement there. And you see it start chopping down. Starts chopping down, right? There's no displacement down, really. There's no displacement up. So we don't really take a trade unless you know what you're looking for, like this fair value gap right here. I didn't have it marked out, though, so that's why I had to wait for price to come back down and show me something that I could see in real time. I'm not going to catch every turtle soup, but the nice thing about breakers is it gives you multiple entries. If you don't catch the turtle soup, you can buy right when price breaks this low. If you want to see more confirmation, you can wait for it to close below the low or break below and then come back and retest the low of the breaker, right? So there's 1 entry opportunity, 2 when it breaks, 3 when it hits back. That's why it's my favorite PD array. There's 3 potential entries. So if you don't get 1, you don't get the second, you can get the 3rd, okay? If it's not clear by then, you need to go back and study. But the way you use it is you go from the swing high to low of the manipulative move that took the liquidity before the run you were looking for. And this was the run right here to come back and rebalance or take out all this liquidity from this move right here. So you can see how we hit the -2. That's a good place for the price might want to retrace a bit or reverse from. And then the terminus of the move is going to be the -4, which is to the tick right there, low of the day. So that's why my last order was down there. 41.6450, 41.6450 right there. Hope that helps. If you have marked an area of consolidation, then liquidity has been taken in it. So what is the original consolidation valid? Not sure what you mean. Sir, what is the turtle soup? Turtle soup is just a term. It's literally just buying and selling like smart money, right? It's just you're anticipating price to take out liquidity just for it to reverse or keep continuing in the direction it went. So like an example would be, see how price has been expanding higher right here? Expansion. Then this is technically, it could be consolidation or a little bit of retracement, right? It's kind of retracing while it's consolidating at the same time. But a turtle soup would be something like this, where you take out this low, right? Because when the price hits this, you can see what it actually hit. Shoot. Did it hit this? Oh, no, it didn't come close. But it did hit this fair value gap, I think, didn't it? Yeah. To the tick, right? It's this fair value gap. That's IOFED. What ends up happening is they actually come in and fill that in a bit. But this will be turtle soup. You have a fair value gap supporting price. You would basically be buying one tick below this low, or as price breaks this low right here, because everyone thinks, oh, we're bouncing, we're going to go higher because it's been going higher. We're bouncing, it's going to go higher. Well, no, what you want to do is wait for liquidity to be swept so you can buy those stops and then ride it just like smart money would. Up, 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 right? So you would buy those stops and you would sell your longs you accumulated to buyers up here. That's a turtle soup. When do you use the -2.5 standard deviation or the 4? I use them pretty much on any trade I'm in if I can make it work. So like right here, see this. Sometimes you got to kind of play around with it. You can see right here. What'd I say? Boom. That candle closes right there to the tick on that standard deviation. And then what happens? We start chopping, right? So you have expansion. And what did I say? You could do it at the retracement, the -2, -2.5. It would give price. Basically, price would want to start consolidating or retracing a bit around that level, and then it could continue lower or higher, just like it did right here. Continue lower. Same with here, right? Even though it took a lot longer, it ended up eventually continuing higher. So, and we actually end up, I didn't even see this. Do we even take it? No. I had this marked out as well, actually, this level. But this fair value gap I didn't even see from the 4 hour. I wanted to see if we could tap this and then hit the daily swing high up here. So when I tweeted waiting, when did I tweet that? I'm not gonna pull it up. You can go back and look. When I just tweeted watching waiting, I had a little eyeball up here at this level. I wanted to see if we could hit that. But the fact that we had a 3 drives, and we were already in a deep premium, you know, we didn't have to come up here and snag that. So, but that's how you use the fibs, right? They can be profit targets. Like for here, if you wanted to catch that reversal, you would want to be taking profit near the 1 standard deviation, right? So what liquidity is near that? Well, it's all these relative equal highs right here, all these highs. So you would just put your limit order 1 tick above the buy side, right? And if, let's say for instance, like the 1 was like right, or the 2 was like right there, or the 1 was right here, right? How much farther can price go above this high? Well, you could say it could go to the 2. Just like we said over here, how much lower can price go below original consolidation right here? Well, it can go to the 4. And that's literally what we saw, to the tick, right? So I hope that helps. I hope it makes sense. That's how I use the fibs. Oh, I'm gonna drink some water, sorry. What are your current requirements for the market maker? For a market maker model, I've noticed a couple of trades, including this one where you have a low resistance liquidity run to the left. Yeah, like for me to classify something as like a low resistance liquidity run, you see a lot of people like to say, like right here, this would be low resistance, or this would be high resistance liquidity run, right? Because price to come back and fight through all these highs that were made, right? And it breaks down below. Now it's gonna have to fight through all these breakers, right? Because this is a breaker if you draw it out, right? I'm not gonna change the color because you see, but like here's another breaker, right? So for price to want to come down once it's just like right here close below, and then comes up and hits that order block, but also hits this breaker over here. For price to want to come back up after it's broken below and want to fight through that, that would be considered high resistance, right? So it's not likely to occur. That's why I like seeing the breaker form on a reversal, because it gives me even more confidence that price is not going to be, or it's going to have a hard time getting back above these highs, because we've already taken liquidity, and it's not going to want to give people who went long right here buying the breakout a chance to mitigate their loss or get out for break even by bringing it back up to the level they bought the breakout at. So that would be like a high resistance, like I guess market structure, if you want to call it that. But like a low resistance would be something like this, like this whole move down, because you have all these fair value gaps right here, these gaps that have not been filled in yet, all these swing lows with liquidity resting below them that have not been attacked yet. So like this would be low resistance, but also you have lack of if you go on the 1 hour, you don't really have a lot of price action, you know, that's going to be hard to cut through, right? These candles aren't very beefy, you know, they don't really look like high probability order blocks to me. So price is going to easily cut through this swing low right here, which you see it does. Rebalances all this. Redelivers through all that price action. And you see just how quickly the moves occurred on the 5 minute. Same thing on the 1 minute. Like we're moving so fast that we're creating volume imbalances. Big, deep fair value gaps right here, and this, I guess you could be like a liquidity void as well. But like in my mind, that's kind of how I look at market structure and like liquidity runs. I'm looking at higher time frame PD arrays. I'm also looking at like, do we have a lot of gaps to be filled? Are there really big beefy candles that are gonna kind of stop us from going lower? This just kind of looked like it was just, you know, cheddar cheese. We just cut right through it. Nothing really supporting price. I hope that answered your question, Diego. How do you have it so the time is locked on multiple charts in TradingView? I just have this right here. Yeah, I have it locked to interval and I have my crosshair locked to both. But when I move it, I can change both at the same time. Those are the settings to do it right there. Did the dollar dropping in the same time as indices worry you while you were shorting? I haven't really been looking at the, like I said, I mean, yeah, but I knew that, like if I pull the dollar over here, like right here, the dollar was dropping because I got in around 9:30, right? So 9:30 is right here in this candle. As we're dropping, right? So were the indices. They're kind of chopping down a bit. But I knew if we're going to keep dropping, it was probably going to come into this fair value gap at least and maybe bounce. And that would be enough to send indices lower. There's ES. ES is right here. So see how the crosshairs, the time lines up right here? Right here is where I entered on this candle. Dollar started dropping to the right. Indices kind of started going up to the left right here. But once we hit up right here, my stop was still above this high. Once we came up right here, I knew we were hitting this fair value gap and we were hitting this order block right here. So I knew that was probably going to at least give a bounce on dollar, whether it was going to send it higher above this high or just give a relief bounce right there. That was going to be enough to start sending this lower. And so I was going to at least get to trail my stop to break even by the time we broke below this low right here that I had marked out. And so when we knifed through it really hard, I knew I was on side. I knew the market maker sell model was pretty much confirmed. And it really didn't matter to me by then what the dollar was doing. I was strictly looking at ES by then, just managing my trade. Let's see. Thanks, it does help. I appreciate the stream. I'm glad you're learning. Let's see. Yeah, Jamar's. I'm sorry, I'm just going top to bottom, guys. I know some of these questions you asked like a while ago, or you have a comment. Yeah, the standard deviations have to line up with liquidity pools in the direction you're trading. Although you can just take profits at the standard deviations, like I did with this right here. You know, when marking out the low of the day, you can just like I said. You want to see it take out this low, right? But if it goes below that low and keeps going, how much farther can it go? It goes here, right? So you can use the fibs just to take profits at. Like if I wanted to, I could have just taken profit right here at the 2 instead of waiting for the swing low. They're both going to make me money, right? But I like to be I'm always working on my exits. I'm always working to be as precise as possible. And so when I basically was looking to take profit at the low of the day right here, even though it got stopped out right here, even though I saw price come down and hit this low to the tick at the 4 deviation, that's like one of the best feelings ever. When your limit order was just sitting there and my stop was actually like above this candle right here before trailing it down lower. We started chopping around like this, so I just said, fuck it. I'm just going to go on the 1 minute and trail it below, trail it above a order block, and we ended up getting popped out on this move. But if I just kept it here or even like here, right, above the fair value gap candle, this big void right here, then I knew I would have been safe, and eventually I probably would have gotten tagged out right here for low of the day. But you know, who cares? Still made money. What's the unicorn setup? Unicorn setup is when you have where's my tool? Let's go over the unicorn setup. Unicorn setup is literally just a breaker. Let's do, hold on. Let's do a bearish scenario, I guess. So unicorn setup is literally just when you have your breaker. Almost make it come up and hit that. Just say the breaker's like this. But inside that breaker, or near it, you have a... So there's your breaker. You have your high, low. What the hell? High, low, higher, high. And your breakers, this candle right here. Unicorn setup is literally just a breaker with a fair value gap. So like maybe inside that breaker, there's a fair value gap, right? Which wasn't the case on the example I showed earlier, but this is the unicorn. And it's even better if you can get it. And like, you know, at the 50 or maybe even, maybe what you can do is put it like, maybe there's one like at the 6.2. And you have the no mohawks in the breaker, right? Or maybe the breaker is super thick. You know, there can be some overlap. It's not one size fits all. But that's the unicorn setup when you have a fair value gap tied to a breaker and they line up somewhat. So it could be pretty much any variation of that. And it'll just be flipped for a long scenario. Do I trade Forex or only indices? I only trade indices. I thought about getting into Forex because the price action on indices has been so bad recently. I mean, look at the daily, dude. Like, imagine what I like. It's just been super choppy ever since we took out the low of the year. Like ever since we took this out, it's been like chop city, bro. But here we had some nice sustained moves, you know. And yeah, this looks choppy, but at least we had some nice volatility with it. Over here, it's just been like kind of garbage, especially over here, dude. And up here, I'm not trying to complain, but like, look how easy. Like, look at these moves. Just hit the order block, you know, BPR. And this is on the daily time frame. But now it's like it's so hard to get a read on a daily chart where we're really gonna go. We're kind of just chopping around until we kind of take out these highs. I don't have the contract adjusted. There we go. Okay. Yeah, it looks different on ES1, but if you go on ESM, we haven't taken those highs yet. So, but yeah, I've been trading indices, not really any Forex. Never really traded Forex before. I learned on indices. I've been staying on indices. Let's see. Keep asking questions, guys. I'm gonna keep going through them. We got about 85 people in here, so if you have a question, ask it. It's probably gonna answer someone else's. Top step prop firm lets you trade futures on TradingView. Yeah, if I do go with a firm, I want it to be tradable on TradingView. I use TradeStation on TradingView, and obviously Paper has their own built-in stuff, but it'd be nice to have a prop firm that allows executions on TradingView because I'm just so used to it by now. So Nick is asking, we still have a volume imbalance. 42.20 from August 19th, 22. What time frame are you referring to? Because you're at there's volume bounces on. Are you talking about the daily? August 19th of 22. Probably looking at like ES1 or something. Talking about right here. Yeah, I mean, price could want to come up and hit that and maybe clear out these highs. You know, all these relative equal highs. Maybe in this high too. Is it too far away to use? We could come up there and hit that tomorrow. I mean, all it takes is one of these days right here to hit that. So, I mean, is it going to happen? I don't know. I take it day by day. A lot of price action could happen between, you know, tonight and tomorrow morning at open. You saw what happened right here. And then we retrace down the next day. So who knows? It's not too far away though. It's definitely something to keep on your chart. But, you know, I don't really look at that stuff until the market even opens, because a lot could change. But it's something, if you're trading on a higher time frame, to look at for sure. Question on month one. ICT says price can't go from consolidation to expansion, consolidation, yet people say that's what they look for. Price can consolidate, then expand. Well, every price move starts with consolidation, right? So you have consolidation, and then you have to expand out of consolidation. You can't go from consolidation to reversal, because there's nothing to reverse on. It's just chopping. So you have your expansion, and then you can consolidate some more and go lower. You can do that. Like, what do you think we did right here? You had, I mean, this is kind of like consolidation-ish. Actually, this is probably a bad example, but let's go like the 4 hour. Like I said, this is just so choppy that, and it's like a slow uptrend. It's not a really good example, but like, I'm trying to find a better example. Like, obviously right here, this is consolidation. And then you have your expansion, I guess, out of the range. And then you have your, like, a retracement, right? And then expansion again. And then what do you think this is right here? From here to here. That's consolidation. Even though it looks like, even though it is like, it's getting messy now. You have your consolidation, expansion. From here to here. Retracement, expansion. And then it starts chopping again, you know? And yeah, maybe this could be viewed as like retracement. But like, isn't an expansion, retracement, expansion, like, I don't know. It's all fractal, right? So for anyone to say that you can't go from expansion to consolidation, I don't know who's saying that. If ITC says that, I'll have to rewatch the video, but I'm pretty sure what he's saying in that video is you can't go from consolidation to reversal, because you have to expand out of that range first. But that's like the back to the basics. Like, that's how you want to view price. Like I said, I'm trading demo in this bullshit because it's not clean. Like, where's the draw? Can you look at the daily and tell me what the draw is? Like, maybe, yeah, you might be saying that high. Okay. But what day is it gonna do it? What day is it gonna go up there? Because we've had doji, right? It could easily do it tomorrow. It could easily do it next week. You don't know. Whereas on a move like this move right here, or this move down right here, it's pretty clear where you're going. You're going for this high right here, right? And you're rebalancing this void right here, right? It's pretty clear. So, and on this move, it's pretty clear where it's going. Once you have this big displacement right here, and we retrace up into OTE, it's pretty clear where price is going to go next. It's probably going to take out the lows, or at least sweep some of these lows, or maybe head into this rejection block. So when you can easily frame a daily bias just by on the daily chart, like these moves right here, but you can't really do that over here. You can't really do it right here, or in any of this, really. Because look, you have these huge wicks on these news days, and then price just immediately dumps, consolidates. It's a lot of give and take consolidation, give and take consolidation, give consolidation, give consolidation, give consolidation, right? It's not super clean. It's not easy to read like it is on these daily moves right here. So that's why I'm trading demo in these conditions. And if you can trade demo and be profitable in these conditions, wait until we come back to these. Wait until we come back to these, because you're going to kill it. And even before that, wait until we get back in easy mode. I wish I could go on the 1 minute and go on the 5 minute and back test on these days, you know, where it was pretty obvious. Just easy mode market, up. Like, dude, people don't realize how easy they had it. And now look what happens, right? Oh, I think I always show this, but You have your equal highs created. Buy sides grabbed. Displacement lower below the swing low. You can short the recession, right? You can short the recession in OTE. Boom. Short the top down to lows, right? If you wanted to, if you're trading on the daily. That was a pretty obvious short, but I didn't even know about ICT back in January 22. So, but it's fun to go and back test on the daily and see things like that. Take profit here, take profit below here. And once we take this low out, big reversal, comes back up into OTE at the 6.2, right? Then heads lower again, takes out this low. Like it's pretty clear when you have these big moves on the daily, take out these relative equal highs here, and then reverse back down below these lows. Like it's just one big market make or sell model, buy model, like on the daily. But as we start getting in this, it's not so clear, right? So that's why conditions are so hard. And you're having a lot of this high resistance liquidity run bullshit in the mornings. You know, I hope that makes sense. That's kind of at least how I internalize it and how I see it. And the nice thing about ICT is you can trade however you want. You can internalize price however you want. That's just what makes sense to me. Yeah, sorry, Irvin, you're right. You basically answered it, what I just went through. Let's say you're in a buy model. How do you know when let's see. How do you know when we'll take buy side liquidity on the first accumulation zone or when we'll react of the order block that initially started the sell side of the curve? So if you're in a buy model, how do you know when we'll take buy side liquidity of the first accumulation zone? Or when we'll react? Trying to get a picture in my head of what you're talking about. Like let's say on today's sell model, just reverse it. You have your smart money accumulation, original consolidation, right? And let's just reverse it. In a sell model, how do you know when we're going to take sell side liquidity from the first accumulation zone, which would be right here, or when we'll react of the negative order block that initially started? I'm not sure what you mean, Francisco. Off the positive order block that started the buy side of the curve. Are you talking about like down here? Instead of taking this low, these lows, you react on like the order block that's like right here? Is that what you're asking? Try and rephrase that. What are the framework models that you use in the morning for predicting what New York will do when comparing Asia, London, and New York ranges? It's pretty much the typical like ICT framework where you have a good example would be let's find a good one. But yeah, this is a good one right here. Pressure, wasn't this CPI? Maybe. No. Was this CPI? Either way, here's a good one. Well, actually, I'm trying to find a really good, oh, this is good. So you have like the Asian range, right? And then London usually forms the low of the day. So Asia's usually accumulation stage or consolidation, letting the orders build up. And then in London, the high or the low of the day is usually made. So on a bullish day like this, you have Asia's low swept. So when London sweeps Asia low, that's usually the low of the day. If we're thinking the daily candle is going to expand higher. So in New York, that's distribution stage. And so at 8:30, let's make this low. Let's make this higher. Obviously, it's easy to see now, but you have these equal lows that are swept. Boom, right? Hits this order block. Inside a discount, OTE, it's the 6.2. And I probably wouldn't have put my stop there. That's pretty tight. I probably would have put it like below the low. And you could enter out the order block or just turtle soup the low with a stop here. So 6.5 handles. And you could target the Asia's high right here. or you could use the standard deviation projections. Let's see if this gives us anything. Or maybe you could use like this swing high or low. See how right here price hits the 4, then immediately rejects down right here? That could be your target right there. It kind of just depends on what swing high you want to use. You could use this one, take profit up here somewhere, like right on this candle. Could use this one for the 1 standard deviation above this high right here, or this high and take a profit right here. Is that to the tick? Yeah, that's at the tick right there. Look at that. Boom. So how high can it go? Up to that level, and that's what you get right there. But that's how I use like that's basically how I use the Asian, London, New York session boxes and the range and all that. I want to see Asia accumulate really nicely, and then I want to see London either sweep the high or the low. When it sweeps both, that's kind of caution for it. We might have seek and destroy, or usually I'm going to be more cautious that morning when taking a trade and looking for a setup, because both sides have been taken already. Let's keep going through these questions. Sorry, I lost where I was. Here we go. Was I in ICT private mentorship? No, I was not. Everything I learned was on his YouTube channel last year. Let's see. Where was I? Now that trading day is done, what would you look for in order to frame a bias or trade for tomorrow? I don't look at shit until I sit down at 8 o'clock. So when this morning, literally the chart looked like this. And I pop on the boxes for a sec just to see what's going on. I'll come over here to see where the gap is for the new week. Come over here to see what we've done. And the chart looked like this pretty much without the red lines. So like we had taken the highs. Yeah, and my chart looks like this. So, I mean, like I said, a lot can happen. You saw how many points we were up from what time the market closed yesterday. From about here to here, all this price action had occurred before I even sat down and looked at the chart the next day. So I don't make any assumptions for the next day. A lot of people like to call moves and predict what's going to happen, but they can't actually execute on it. So what's the point? Can't execute overnight unless you're going to stay up all night. I don't do that. I don't try and call moves before they happen. But what I will do, actually that's false. That's false. I do try and call moves before they happen, because how else would I have caught that sell model, right? But I'm not in these conditions right here, up here. I'm still just going to do what I did yesterday. All right, let me get on the ES1, ESM. I'm still just going to do what I did yesterday. Mark out that high. Maybe mark out that high, and then just watch the lows, right, for the high and low of the day. Because all we've done now is just retrace back into basically equilibrium of the range right here, the 50%. So we're kind of just chopping around now, right in here. There's really nothing to do. You just need to wait for price to want to accumulate in Asian again, like we're doing right now, and then let London maybe tell you the low of the day, like right here, or back over here, high of the day. So like here's a good example for search and seek and destroy. You have Asian session, London takes high and the low, and then New York takes the high and the low, right? So that's seek and destroy. Same with right here. London takes high and the low. That's 2 days in a row, 2 trading days in a row. Obviously, it's a Friday and a Monday. 2 trading days in a row, seek and destroy. Like, it's just super aggravating. I didn't even trade this day or this day, right? Like, if you go back to my executions, that was on the 17th. Did I trade that day? Yeah, look. I didn't trade on the 14th. 13th was the last day. I didn't trade on the 17th, right? So 2 days I didn't trade. What I do is I wait, like on the 18th, I wait for my setup. I wait for something that I like. I wait for something that makes sense, that's going to give nice range. And the way you can wait and keep yourself from taking a stupid trade like I used to take is by getting off the 1 minute, because everything looks like a setup on the 1 minute, dude. Everything. I don't care what anyone says. Like, I would go crackhead mode when I first started and be like, oh my God. Like, let me see if I can find it. Oh my God, like this is a shift in market structure, dude. Like we just took out this high, this low. Like, all right, I'm gonna short this fair value gap. And I would sit there and I would put my stop above this high and I would just wait in this chop and it would just take its toll on me mentally. And eventually, after waiting for an hour, like how long is this? I got in like let's say I got in like right here. After 81 minutes, I would get stopped out, or I would maybe, go lower right here and I'd trail my stop to break even and boom, stop me out, break even after like 15 minutes. And it's just like the most aggravating thing. And obviously, yeah, I know it's 7 a.m. That's just an example. But like over here, like right here, oh my God, like, dude, let me just enter on this fair value gap. And I'm just going to put my stop above the order block high, like ICT says. Boom, you're stopped out. Price goes lower without you, right? Get off the 1 minute. Go on a higher time frame because you're missing the big picture. You're missing the big moves. You're going for these 5-handle scalps that ICT talks about, but you're missing the big moves. You're missing the overall narrative. 5 handles should be a stepping stone. It's not the end all be all. Basically, what he's trying to prove with the 5-handle stuff is that you need to crawl before you can walk. So if you can't even find 5 handles, what makes you think you can find a 20-point move, right? What makes you think you can find a move from here to here if you can't even find 5 handles? That's the point he's making, right? But if you're just shooting for 5 handles for 5 handles' sake, I think you're doing it wrong. Because if you know you can get these bigger moves, but you're just taking profit at 5 handles, then like, how are you going to grow, right? You're only going to grow by putting yourself through the motions, right? How long was I in this trade? I got in right here on this candle, remember? I get in on this candle right here. So I was in the trade for a total of, I got stopped out right here. That's 22 bars, right? So that's 110 minutes. Make sure I'm doing that right. Yeah, 110 minutes, okay? So I was in that for over an hour. Almost 2 hours long, I was in that trade, sitting here watching, managing it on a 5-minute chart. How are you going to train yourself and how are you going to practice patience if all you're doing is getting these little 5-handle scalps on a 1 minute going crackhead mode, when literally all you had to do was get in and just wait, right? And yeah, like maybe your model is just taking 1 minute scalps, being a high frequency trader. That's fine. There's nothing wrong with that. But for me, I am trying to catch the daily expansion of the candle. I want to be buying right here at near open or below it, okay, on this wick right here. And I want to ride that move all day until we take out something, right? And what is that something? Maybe something like a high, an old high. Or maybe it's filling in a volume imbalance, like right here, okay? You could be taking parcels along the way. But I'm not sitting here trying to get these 5-handle scalps. That's just not my style. And if that's all you're able to do with ICT and you can't progress past that, that's fine. There's no shame in that. Because like he says, you can make a living on these 5-handle moves. Okay? You can make a living on 5 handles. It's all you need. Because you can put 10 contracts behind those 5 handles and you can make a mint. But for me, I'm always trying to progress. Okay? I think everyone else should be too as well. And I think 5 handles should be a stepping stone. What is handles? 5 handles? A handle is just $1 in price. See how on the right side over here, if I go from 41.96 to 41.97, that's 1 handle. And in every handle is 4 ticks or 4 quarters. You have 96.25, 96.50, 75, $1. That's 4 ticks. 4 ticks make up 1 handle. Handle's the same thing as a point or $1. Keep going through these. I'm new to ICT. Should I worry about falling behind the 20? Nah, dude. 2022 mentorship's better than 23 in my opinion. It's better for a newbie. I would watch the 22 mentorship write down 3 things from each episode that I thought were most important. And then I would, let's see. I'll just type it out for you. Step 1, 2022 mentorship. 3 things most important each episode. That way, when you're going through it, you have a little table of contents. And you know the 3 most important things that you thought were most important, that he says are most important to keep in mind. That's what you want to keep. That's what you want to do. Okay, so you can refer back to the episodes, because he doesn't title the episodes. Just episode 1, episode 2, episode 3. Do this, and you have a little mini table of contents to refer back to for each episode for a nice refresher. Okay. Step 2, core content month 1 through 4, and do the same thing. Maybe you could take a little bit more detailed notes if you want. This is going to set you up and teach you breaker blocks, how to think about the market with the market efficiency paradigm. It's going to teach you high resistance, low resistance liquidity runs. It's just going to reinforce the concepts that you learned in the 22 mentorship and teach you a little bit more in depth about order blocks, fair value gaps, rejection blocks that he doesn't even really teach in 22 mentorship. So I would do that in this order. And thirdly, I would rewatch 2022 mentorship and take detailed notes. All right. So expand on the 3 things that were important in each episode. That way, and have your table of contents you made in front of you, and you can add on to the notes, and just with your own graphics. Put your own graphics in there. This is what I would do. And once you've done this, you can start going through step 4. Core content that interests you, and the 23rd mentorship. So just start following along. I will honestly, I don't know if I would even bother going back and watching the 23 mentorship videos he's already made. I've just watched every single one of them live, but they can be like 3 hours long. So if you want to sit there for 3 hours and watch price action that already happened, be my guest. But I think the main thing that you get from the 23 mentorship is going to be watching it live with him alongside him in the market. But if you can't do it live, just pick up where we're leaving off now and watch the 23 mentorship videos for like tomorrow if he does one. And because the biggest benefit for that is watching him call it live. Okay. But like I said, he's on the 1 minute calling it live. But I don't trade in the 1 minute. So I don't really, if I'm going to be trading, I don't have his Twitter pulled up. I don't have his mentorship videos pulled up. I don't have his live streams or any of that pulled up if I'm pushing the button. Because it's just me and my thoughts in the trading. You know, I want to be self-sufficient. That's the goal. You can't rely on Michael for the rest of your life. He's not going to be here forever. He says he's going away in November, right? So what are you going to do when he's gone? You're going to have to study on your own. So the hand-holding stops end of the year. That's what I would do, though. I would watch in that order. And if you didn't get the list, just rewind. You can screenshot. Do I use dollar in any way? Yeah, I look at it. I don't base too many trades off of it, but it's just another confluence thing I look at. Which trading model gives you confidence to enter the trade? Breakers, power 3 is what I use. Yeah, just really power 3. I'm trying to catch that. Like just having the 8:30 open on my chart in the midnight open. If I had to have only like 4 things on my chart or 2 things, it would be 1, 2, and that would be it. I don't need anything else. Because I've done this so long, I can just look at the chart. I don't even have to I don't have to draw these if I don't want to, right? Like I could easily just eyeball it. And when I see this displacement lower in price, I know that this candle right here is going to be my breaker. So I would just put a limit order at the low and put a stop above the high, and I just sit here and watch because I know that the market structure is like this. You know, I've just done it for so long. If I only had to have a couple things drawn on my chart, it would be these reference points right here because I know we're in a deep premium if we're bearish. 3 drives. So and it's buy side of the curve, and we're starting to flatten out here. Breaker forms on this candle, sell side of the curve. And it's a lot more fun being a bear when you have moves like this than it is waiting here for hours on this choppy move up to the upside. It's way more fun getting out in 15 minutes or 3 5-minute candles. Like, it literally took 15 minutes to take out all this price action versus waiting in, I guess if you're getting in right here, waiting for 34 5-minute candles versus 3, right? It's way more fun being a bear. The moves happen so much quicker. What is lower resistance liquidity run and higher resistance? LR, and HLR. Oh, wait. Where is it? LR and HRLR. It's a tongue twister. It's just high resistance liquidity run and low resistance liquidity run. Let's see here. What indicator to use to separate the sessions? What's up? What's up, Kit? I don't know if you're still in here. Sorry, I'm still going through the question. What's up, Hydra? Thanks for stopping by, guys. If you're still in here, let me know. I've pretty much made it to the bottom now. I was just trying to catch up on the questions. People are still asking. Let's see. What indicator I use to separate the sessions? You talking about this one? Like this? Or are you talking about using the boxes like this? Because this is called the box, the colored boxes is this. Futures Exchange Sessions 3.0 by Infinity Trading. Can I link it in here? I can put it in the here. This is for this is for boxes. I'll link it. And then for this right here, I do manually. I just draw this every day. I like getting my hands in the charts. If you do an indicator to do it, I think it kind of makes you lazy. It doesn't really make you think about what's actually occurring. Because if I draw this line out, I'm like, okay, you know, obviously we can come down here before the new day and take this low out. And so in the morning, I would readjust it and say, okay, we actually took out this low. What's over here that might get taken out? It could be this low. It could be these lows. Like if you zoom out, what do we kind of have right here? Trend line. So maybe market makers want to come out and violate this, get people to, you know, induce them to go short, take out this low, and then really maybe bring price back higher into the range again that we've been in. So you never really know. It's always good to have a higher time frame perspective. And I can just kind of zoom out in the 1 hour if I want. But yeah, that's the indicator I linked for the boxes. With Seek and Destroy, doesn't it make sense to trade across the range? That's a good point. Let's go back. Like right here. Yeah? Really, all you can really do though, like over here, if you're on a 1 minute, it's a lot of give and take, right? Like this is obviously a really good setup if you caught it. I don't trade 1 minute, so I didn't get it. But it's the same thing on a 1 minute. You have your high, low, high breaker. Price comes up. Fair value gap with the breaker. Unicorn setup if you really want to think about it. And that happens right at the 10 o'clock hour. And then boom, retracement. Well, on the 5 minute, it literally just looked like an up and down. This is literally all you see. So then straight down. It's just not all. I think I tweeted about this actually. Everyone, this is right at open too. Everyone who missed this move, when they see this right here, they're probably going short, right? And they're getting chopped to pieces. Every one of these is a 5 minute candle. They get chopped to pieces all day into lunch. And then finally price opens back up again around 1300, 1 o'clock. And you have some nice range, right? But everyone in here is getting chopped trying to trade these moves, right? Everyone who missed these moves is trying to force something on a Friday. I didn't trade any of this today. I mean, Seek and Destroy is just not high probability in my opinion, so I don't trade it. There's a reason it's called Seek and Destroy. Yeah, if you want to trade turtle soups, be my guest. There's nothing wrong with it. If that's your model, go ahead. Let's say we're in a sell model. How do you know? How do you know when we'll take sell side liquidity before the first accumulation zone, or when we're? I think I answered that, didn't I? Or when you react to the bullshit about they initially started the buy side. Oh, okay. I see what you're saying. You're talking about like if this was your, because this is what started basically the. I guess we got a 15-minute time frame. You're asking like, how do you know you're going to take out the original consolidation down here, or if we're just going to come down like somewhere in OTE then go higher? I think that's what it sounds like you're asking. Like, how do you know we're not going to bounce on this order block right here? Is what basically what you're asking. Good question. You don't, because you don't actually have to take out the original accumulation or consolidation, if you want to call it that. You don't, but you trust in the narrative, and you trust in the fact that we're on buy side of the curve, and now we're on the sell side. And what usually happens on the sell side of the curve, you're going to want to target that original consolidation. Yeah, crackhead mode. But that's why you take partials, dude. You can hold for terminus. You saw where I took partials. I got out right here. I didn't wait for it to take out the low because look, it could have bounced right here. You don't know, dude. Or right here, actually, it did. Did it hit the tick? Yep. Breaker right here. Even though it's on a 15-minute, low, high, lower, low. This is technically a 5 or 15-minute breaker. See? It hits to the tick and then retraces. Let's go 5-minute. Yep, right there to the tick. Boom. Hits it. Breaker. Retraces a bit, and it also happens to line up with the projections. See, it's just a lot of confluence. So you don't know. Maybe we could have reversed there. You don't know. That's why I took a partial. I took half off when we broke that low. You don't know. So if you want to be a greedy pig, not trying to call you a pig, but there's this game we play. It's called Greedy Pig, but if you want to be greedy and try and hold for the whole move, sometimes you might get it most of the time, but sometimes you might not. So you got to be okay with that. You might get reversed on, but I always take partials. What's my ideal entry tape reading time frame? Nah, bro, I don't go in 1 minute. This is literally what I look at. What you're seeing on my screen right now is what I stare at all day. And I have an SMT chart to my right over here. That I pulled over. That's literally all I look at. And then I'll kind of just toggle if I really want to compare NQ and ES side by side. But I can just pop this up, and this is the same thing, NQ, just for a quick glance. But if I want to go in depth, I'll just kind of toggle between here. Yeah, with OGs of price in here. Core content is life. I'm slowly making. All right, I'm back to the bottom, guys. What's up, Hydra? What's up, Kit? Thank you, yo. Was that a seek and destroy yesterday noon? So like over here? This is just like lunchtime consolidation, in my opinion. And look what happens. If you really want to get turtle soupy, no gatekeeping here. If you want to get turtle soup, after New York lunch, right? You're basically looking for well, what is it price doing in lunch? First off, it's taking buy side, right? Above these highs. It sweeps this high. What the heck? Is this high? Okay, so 1, 2, 3. 3 drives, drops lower, and then it takes out this low. But if you zoom out, what is this? Why is it not changing colors? What is this? A 5-minute rejection block. Well, there's a PD array. Optimal trade entry. right? And so what does ICT say in 22 mentorship? You want to see price come down, and you want to see it, think about it. We had displacement higher, retracement. And was this retracement really there was a lot of displacement in this, or was it really just a trickle down, right? Lack of displacement can tell you just as much as displacement can, right? This wasn't really a displacement down. Like this move was, this is a slow trickle down. Seek and destroy. Slow retracement, seek and destroy, down, down, down to OTE. We hit this right here. Maybe if you wanted, you could even point out like this order, didn't really hit it, but I guess you could do like, this could be, this whole move right here could be a breaker because we take the low out, but like maybe this order block right here. I was kind of looking at the rejection block here. But like lack of displacement can tell you just as much, if not more, than displacement can. So if we're failing to really displace all morning down, as we're going down, what does that tell you? Well, it tells me that really we're just kind of downtrending and trickling down into a discount below the 50. I pulled right here. And what do you have right here? You have equal highs, right? Equal highs right here. And you have equal highs right here that are going to be in a premium, right? Anything in red is a premium. So you can be taking partials here above this high, and finally above external liquidity in this liquidity pool up here, which is buy side. So this is kind of what I saw with Seek and Destroy yesterday. So yeah, I guess in the afternoon or in the morning session on Monday, you did have Seek and Destroy, right? I didn't take a trade. I'm only really trading the open. So I kind of missed this move right here. And you really didn't get a chance to get in unless you, one, bought the turtle soup right here, because we didn't really have much displacement down. Yes, what did I say? We have maybe some fair value gaps that form, right, that displace lower. But in Seek and Destroy, you're going to have that. It's a lot of give and take, right? Give and start shopping again. Give. And then finally, on the third time we took liquidity, you have one pass, two pass, right? So you have price comes down 1, 2, 3. On the third pass, it's kind of like if 3 drives. Okay, we take out this low once, take out this low, take out this low, right? And so when that happens 3 times, it's kind of like, it's just like this occurring phenomenon in price that it's almost like a 3 drives, okay, in OTE, and then you have a PD array, supporting price in OTE. But there's just like this phenomenon that I keep seeing, and I don't really know how to explain it. But when you're coming down with lack of displacement, and it's like a 3 drives, but like a bullish sign. I don't know how to explain it. It's similar to what we went over this morning with these 3 drives, right? But we are taking out liquidity each time, and we are rebalancing this, and this is just something to keep in mind when you're watching price. Are we displacing lower? And if we are, or if we aren't, what's like the higher time frame narrative, right? That you're not going to be able to see the big picture on the 1 minute, because all you're going to see is mumbo jumbo, right? You're going to see dick. You're going to see nothing. But when you zoom out on these higher time frames, like the 15-minute, I always had the 15-minute to the left over here. There really is nothing here tradable, right? And it's just a slow decline down. So in my eyes, this is just a retracement into OTE, and then you have that explosive move right at 2 o'clock. It takes out the low. So you could be a buyer there. And if you were going to buy that turtle soup, I probably would have just put I probably would have just bought, let's be realistic, you bought right at the low. And you could put your stop maybe below, 1 tick below the rejection, this low right here. And then held for maybe this low-hanging fruit. First target in a premium, right? Or I guess you would use that. So this would be your first partial. That's almost a 3R trade, right? Or this one, 4R, or this one, 5R. But of course, you want to pay yourself, so you would be taking partials along the way, because price may not want to come all the way up here before the day closes. And you can see it barely does it. It just spools higher, higher, higher. And then right here on this candle, 1600 market closes. And then we go into consolidation again. So what session do I like to trade at? I like to trade the New York Open, which is basically this move right here that occurred. I like to trade in the purple zone. You know, problem, Francisco. Yeah, partials pay 100% of the time. Hodges got it. So you want to know about my journey? Let's see. It's about 9:50. We've been at it for an hour 50. I'll end it here in a little bit. I got through everyone's questions for the most part. I don't want to go too long. But when did I start learning about trading, and when in that journey did you meet ICT's concepts? So I started learning about trading in college, and I was like 20s. And I always knew what stocks were. Like my dad was into stocks. He's got a portfolio. My grandfather was big into stocks. I remember we got him an iPad for his birthday or Christmas or something. And he's so old school. Like he used to watch the tickers on TV come across the screen, and he would trade just by knowing, like, he's like, oh, that the price of Apple today is this, like, let's buy a little bit of Apple. And he would trade just on off the TV, like tickers that were scrolling across the screen at the bottom. Like, it's crazy madman. So I kind of knew what trading was, and I was always around, like he was a big investor. So I was always kind of around it, but I really didn't get into it until college. I downloaded Robinhood like everybody else on their phone. And then COVID hit, and I had a lot of time on my hands, so I kind of just started learning more about it. And I didn't really start taking it serious until I applied to dental school, because I was trying to be a dentist. I'm 25 now, but I applied to dental school in 2021 or 20. I graduated 2020, so yeah, I applied in 2020. I got an interview, like my number one school. I think like middle of COVID, everyone was like, all the admissions were like flooded with people trying to change their profession because they're having midlife crises and they thought the world was ending. So the competition was really high. I got an interview out of 1,700 people, only 200 people got interviews. And out of those 200 people, only 75 people get accepted. So I got an interview and it was all on Zoom, and I live literally right next to the school. I was like, this is fucking stupid. Why am I on Zoom right now when I can walk 20 feet across the street and go to the office and have an in-person interview? So I had like a Zoom interview, ended up not getting in, but throughout that whole process of applying, shadowing, I was trading. Like I was in the markets watching it every day. I was trading trend lines. I was trading EMAs. I traded like the Ripster clouds, if you know those were. And I was trading options. I didn't even open a futures account until after I found ICT last year. So I was already trading like almost full time, not really making money at it or living off the money I was making. But I was in the market every day. So I had some experience already. And I had basically been, looking at charts since I was in college. So I guess you could say I have like 4 years of experience, but the experience I had, wasn't ICT experience. It was all just support resistance, like retail concept stuff. But I didn't find ICT until beginning of last year. I was a part of some Discords, and some people when they were talking about had this fair value gap indicator. Let me see if I can find it. Hold on. It's like SMC Spartan. Yeah, this is it. It was this. And it would paint every single fair value gap. Oh my God. Like it doesn't even go back that far. It would paint every single fair value gap on the chart. And then I was like, how do you use this? And people were like, dude, I don't know, but I just know that these yellow areas like to get filled. And I was like, fill? What do you mean? Like, and so we would notice like price would come down and fill one of it to the tick and then go higher. I'm like, dude, what the hell? Like this shit's crazy. And so we would like right here, like this would get filled and then it would go higher. And I was like, dude, there's something here. And so that's how I basically found ICT after realizing that like, dude, something is actually like with these fair value gap things. and I ended up finding his channel. Someone posted a video, and I just started consuming like all the 2022 stuff. And then I remember the day of August, I think it was August of last year. I remember the day he started dropping the core content videos. I was like, holy shit, like this is gonna change like everything. And I was like binge watching the core content like a little kid watching TV. And yeah, like that's basically how I found him. And I just kind of dropped everything I was doing to learn this, because I knew after seeing him like demo trade like with that kind of precision, I was like, that's what I've been looking for. Like I knew something was up with these fucking markets. I knew they were fucking rigged. I was like, I know. Like when you sit here and watch charts for so long, like I had about 3 years of experience by then. When you sit there, even if you don't even know what you're doing, right? But when you sit there and you watch and you have that much chart time, you just kind of know that like something's up. Like something is fucking up. And you just can't put your finger on it, right? And that's how I was. I was like, I just can't put my finger on like what I was missing, or like how to explain the certain little things I was seeing, until I found ICT. And I was like, dude, this makes so much sense. Because I didn't even think about like resting orders in the marketplace. I was just trading fucking trend lines and patterns. You know, rising wedge. I was just trading trend lines and patterns. Nowadays, I don't have a single like vertical line or diagonal line on my chart. Everything is horizontal, because I'm just talking about liquidity and fair value gaps and all that. Only time you see me with something like this is when it's like SMT, right? Or a broadening formation, just to illustrate that we are in like a seek and destroy type model. But I hope that answers your question. That's kind of how I found ICT, and I've been basically trading it full time every single day, with some exceptions of like vacations and stuff, since about May of last year, or earlier, probably earlier than May last year. So I've been doing it every single day for about a year now. So let's see. How much time did it take for you to start feeling confident trade for live funds? When I stopped getting excited on calling the moves, like today, when this is panning out, like I didn't feel anything. Like when price coming up here, I had already accepted that if it came up above this high, I was stopped out. And I was like, okay, I'm going to lose 1% of my account if price comes up here. Is that a risk I'm willing to take if we come down here? Fuck yeah. Like if I can get in, like that's why we take these asymmetric bets, right? That's why we take that's why you have to know, you back test your system and know it works. Know that if you're taking 4-hour trades, like this whole trade in the end after taking partials was a 3.5-hour trade, meaning I can lose 3.5 of those trades. Sorry, I can lose 3.5 of those trades, win one, and still be break even. Makes sense? Because for every dollar I risk, I stand to make 3.95 or 3.5. So that's how you have to think about it. And the only way to do that and not even get emotional or not worry about the outcome is by doing it on demo first until it literally gets boring to do. Like it has to be so monotonous, like clockwork. You see your setup, I see the breaker form, hop in, I know where my price targets are, and I just wait, and it plays out to a T. And once you get past the point of being like, ha, look, I called that, let me go brag, or ha, look, like I'm the man, or getting excited and it goes your way, or getting mad that it doesn't go your way, once you can get past that on demo, and the only way you can do it is by demo. I'm telling you, if you do live money, you're going to be too invested in making money or losing money, and the outcome of the trade, you're not gonna be able to look at it objectively and say, this is what I did wrong, this is what I did right. I didn't wait for displacement. I didn't wait for a fair value gap. I was too zoomed in on the 1 minute chart, and I missed the overall theme or the overall bias or narrative of the market. You know, you're going to be too attached to the money, and then you're going to be focused on the money, not focusing on being a better trader and improving what you did wrong. So by the time I did it for so long on demo that it just got almost like boring. And when I say boring, like I don't mean, oh, like it's boring, I don't want to do it anymore. But boring is in like, I'm not surprised by the outcome. I've seen it a million times before. I've lost a bunch of trades. I've won a bunch of trades, right? By the time it got to that point and I was doing it consistently, I was like, okay, that's when you just start trading like micros, or you start trading, an E-mini. It kind of depends on what your account size is, but that's kind of like what I would say to do. That's how I did it. And I'll be honest, I jumped into live funds too early. I think I made like 23% my first month trading ICT concepts with a live account. And then I lost it all like through paper cuts. So do you know how long it takes to lose 23% of your account back to break even where you deposited money via like small little paper cut losses? Dude, I was on a fat losing streak. Like every single trade I would take, I would lose almost. And it took me like a month or two, and I was just on a fat losing streak. And like, I think when I got back to break even, or just about break even, I said, okay, let me take a step back, because something I'm doing is not right. And I was just going, all I had done was watched half the 2022 mentorship and stopped and thought I could do it, right? So I was being arrogant, and I was not being like completely honest with myself until I basically was back staring myself in the mirror saying, look at you, you fucking idiot. You're back to break even after being 23% up. Whatever you're doing is not working. You need to fix it. And so that's when I went back, rewatched 2022 mentorship from the beginning, took detailed notes, rewatched core content month 1 through 4, and then pretty much started watching the rest of the core content on futures and all that. So I've watched the 2022 mentorship about 3 times now, all the way through. Like I would watch a video before bed. But that's what I would say, like, you need to do before you can do live funds. And like for me, that was really hard to overcome, or to like be honest with myself about, because I'm the kind of person who doesn't like to waste time. I like to be very efficient, and I like to be paid for my time, right? So if you're sitting here and you're saying, oh, I like to be paid for my time, like I was saying. So that's why I trade live funds, and I don't even trade demo. I didn't even start with demo. I just want to trade live funds because I like to be paid for my time. Well, you're going to be doing it wrong, because I tried that. It doesn't fucking work. Okay. You're going to end up just like me. You're going to get lucky. You're going to think you're the man, and then you're going to get humbled. If you only had one trade model framework for the rest of your life, which one would you use to maintain your consistency and profitability? Power 3 probably. And Power 3 is literally just oh shit, it's not a good example. I think I could show you a better one. Y'all know what Power 3 is, but I'll pull it up. I got an example right here. I'm gonna cut this off here in a bit. We are 2 hours in. I gotta go to bed. This is Power 3. Right? Literally just buying down here close to midnight open or at the low, and then boom, riding the daily expansion higher. Like that's all I would use if I had to only choose one ICD concept to trade. Just being able to mark out midnight open and 8:30 open. And then look for liquidity pools or imbalances above and below. Like that's all I would use. If I couldn't use a breaker to get in, like right here, if I couldn't use a for value gap or anything, like I would just try and buy as close as possible to that opening price, or sell as close as possible to the opening price, and use the market structure to take a trade. Let's see. I heard of ICE. What is your? Sorry, I'm skipping some people. Do you trade Forex pairs? No, I only trade indices. Any tips on money management? Yeah, don't risk more than 1 or 2% of your account. I wouldn't even. I would just do 1% or less, especially when you're first starting out. Because when you're first starting out, right, you want to give yourself room to be wrong, especially with a live account. So if you're gonna be losing a lot, your win rate's gonna be a little bit lower than someone who's been doing it for a while with live funds. So you don't even want to be risking a full percent. Just do a 0.5%. That way, it's really hard to go into deep drawdown if you're just risking 0.5%, right? So when you're first starting out, risk 0.5% and trade micros. There's really, what you're trying to overcome is thinking about it like money. Like you'll notice on my trades, on my live executions, I don't even have the execution stuff, like on the right hand side. I don't even have it in money or ticks. It's just a random percentage. And that percentage is all that basically when I got in right here, the percentage is only showing like, see how it says negative 16% right here? That's literally what it says on my execution over here. So I know ES is down 0.16%. That doesn't mean anything to me in the terms of money, right? I can't calculate that. But when it was in ticks or it was in dollars, right? I could easily just calculate how many ticks that was, multiply it by 50 if I have one contract, and that's how much money I was up or down, or how much I could lose on a stop loss. Now I don't even associate the positions with money, right? The price goes up here, I don't know how much I'm down. I'm not sitting here watching the dollar amount right here, that pops up. I'm not sitting here watching it to the side or on my phone. All I'm focused on is if the breaker is supporting or rejecting price, is the theme or the narrative that I'm playing, or but that I'm aiming for, is it still occurring? Is it still intact? That's what you need to be focused on. If you have it in dollars, if you have it in ticks, if you even have anything like that, showing you how much you're up or down is just going to distract you from actually focusing on what matters, right? Do I trade? Let's see. My go-to time frame for trading, and it's these right here. 1 hour, 5, 15. I don't go anything smaller anymore, at least. I used to go 1 minute, but high time frame's the way, bro. It makes you be way more patient. And for me, my style has always been trying to catch the bigger moves, not these little 5-handle scalps like I mentioned earlier. It's always been to try and catch the daily range. So to do that and get the big picture, you need to be looking on the higher time frames. The 1 minute, you're just going to get chopped around, or you're going to miss the narrative. And that's not saying that, oh, okay, well, you want to enter on this breaker here. Let's go on a 1 minute chart and like see if we can narrow in and have maybe a tighter stop loss. Like, okay, oh look, there's a little, so you have the breaker here, but then a mini breaker formed right here, or right here. Actually, let me just draw it with a box. So yeah, you could have been a seller on this breaker right here, on a smaller time frame, and then you could have had a really tight stop, stop above here, or even above the breaker high right there. So only a 2.5 handle stop, and then you could have wrote it down to, here, and then you would have had an 8-hour trade. It's like, you can do that, right? But you don't have to do that to be profitable, first off. And I feel like you're just doing too much. You can do that. That's a really good example in hindsight. But for me, if you're getting too sucked in, it's just super easy. And from experience, I've gotten sucked in on the smaller time frames to where I'll lose sight of the big picture, right? And in hindsight is always 20/20. But would you been comfortable seeing that price jam up here, right here, after taking out these lows? You probably would have tried to long that, honestly. I bet some people were trying to long here because they saw these equal lows on the 1 minute, right? And then they saw a displacement higher. I guess you could say this is displacement on a 1 minute because the fair value got formed right there. And then price comes up and hits this order block, right? And they probably thought, oh, we took out this high. We didn't respect this fair value gap. We closed above this fair value gap here, right here, I guess, on this candle. I don't know if you count that as a closure, but oh, well, if this wasn't a market structure shift, and this definitely was, right? And they may be trying to either buy, or maybe they bought right here, and now they're down. So you can lose sight of the bigger picture on the 1 minute. And that's why I'd use the 5 minute and higher for my executions. I heard of ICTs. Do you trade for a living as income? Yeah, I have. That's another reason I want to get a prop firm account. I currently pay my bills. Well, first off, before I went full time last year, I had money saved up, right? So that's another thing I would recommend is having money saved up or having a side business or having some other way you're making money. That way you don't have to rely on trading and putting all that pressure on yourself, because then you start forcing trades saying, oh my God, I got bills coming up, I gotta pay. And so you start forcing trades and you lose even more. It's just a lot of pressure. So I would recommend having money saved up. But yeah, I trade full time every day. Heard of ICT from you. I want to thank you for changing my life for the better, even if I'm still learning. Thanks, IG. Yeah, I was the whole reason I wanted to create a page on YouTube was to do something similar. I think if I had not been damn, I can't. I've been talking forever. If I can just change one person's life through what I'm doing, it makes it all worth it, right? Because if I wasn't shown this, then I don't know where I would be, right? I might be trying to go to dental school again. I might be working a shit job I hate. So the fact that I can wake up and do this and it doesn't even feel like work, and I can go sit by the pool, or I can just take the day off and not have someone breathing down my neck whenever I want, that's all worth it to me. I mean, the money's good, right? I don't have like a Lambo lifestyle or anything, but I don't do it for the money. The money's just the byproduct of what I really like, and that's the freedom to be able to go to my parents' house 3 hours away for the weekend if I want, and stay for a week, or to travel, or to get sick and not have to work that day and have to worry about time off. And it's just nice to be able to have the freedom. So that's really why I like it. Morning routine. Yeah, basically I already kind of did that this morning or earlier in the stream. So if you want to go real to the beginning where I did the trade recap, I literally walked you through like what I was looking for, and I had the bars all in replay mode, and I was going through. So I'll just go rewatch that part. What turned your paper cop losses around? Going back to demo and getting consistent on demo first, and getting out of that losing mindset and the losing streak I was in, getting back consistent on demo. And then when I finally was, ready and felt bored just doing the same old moves over and over again, and it just wasn't really entertaining to me at all, or I wasn't sitting here bragging to anybody in a Discord or in a DM or posting on Twitter for likes or anything like that, when I finally just was okay doing it myself and not having to prove it to anybody but myself, it wasn't even like a big deal to me. That's when I went back to live funds, and the paper consistency just carried over to the live fund consistency. No, I don't look at the 1 minute at all. Sometimes I might look at it like right here. When this big candle happened, when price came back up on this candle that I entered on and filled this in, so there wouldn't be a fair value gap right there. That happened literally within the last probably 10 seconds of the candle close. So I knew that on the 1 minute there's probably a fair value gap there. So I went out on the 1 minute, and sure enough, we had been chopping around here, and you can see right here, 9:39, and then the next candle opened. That filled in the 5 minute fair value gap on this candle that would have been there. So in the last 30 seconds. So I knew on the 1 minute there was a fair value gap here because of all this chopping around. And then in the last 30 seconds, the price came up until the 5 minute candle closed. So I knew there's a fair value gap on the smaller time frames. And I just went on the 1 minute to make sure. But I'm not sitting here managing. I'm always, the time frame I enter on is what I'm managing it on. So I hope that answers your question. Would you say the breaker block setup is your only model or favorite? Yeah, I'd say the breaker is my favorite because remember it has 3 entry points. Turtle soup, right when you break the lower here, is pretty aggressive as well, and then you could enter as it comes back up and to retest it. I'm gonna stop answering questions here in a little bit. This stream's getting pretty long. Is Power 3 AMD? Yeah, it is. Says you're in a premium. So 830 over. What time settings you're using in the 9 sessions? Here, I'll show my. Yeah, they look different because I have altered settings. Here you go. 1 minute useful for really want to tune in an idea. Yeah, it's good for narrowing in super low risk entry, but I find I end up taking stupid trades over the long run using the 1 minute than I do taking the 5 minute. Like I'm telling you, every single trade right here over the past 4 days, this is all 4 days, almost 10% in 4 days, 4 trading days. Only traded 4 days, and this is the outcome. Starting with 100,000. See? These are all taken on a 5 minute or higher. All a 5 minute or higher, risking 1% or less. 1% or less, 5 minute or higher. All right, let's answer the last of these. Have you ever been a reversal trader? I tend to trade reversals. Yeah, like this would be a reversal right here. Smart money reversal. You can get continuations too, like right here, expansion, continuation, higher. Like this would be a breaker block. Because you have a high, low, higher, high, and then boom, price hits the breaker right there. It goes higher. So that could be like a continuation because you have consolidation, right? And even like right here, didn't we say this is a breaker as well? You have a low, high, lower, low, comes up, hits it, boom, higher. So like you can catch continuations. I guess this kind of would be like, yeah, it's like a reversal almost, right? But it's already reversed right here. So now you're just hopping on for the trend continuation. How long did it take to become numb? It's different for everybody. Like it might take you 6 months, could take me a year. It's different. So like I'd probably say it took me like at least like 3 months because I was on a fat losing streak and I had like no confidence in myself. So I was back at break even on my account and I was like, fuck this. I'm going back to paper. I finally just swallowed the pill. I was like, I'm not ready. And that's something like a lot of people can't say because they are not able to be brutally honest with themselves. And that's why a lot of people aren't going to make it in trading because you have to own every single thing you do. Because if you mess up in here, it's your fault. You can't blame it on the market. You can't blame it because it's rigged. We fucking know it's rigged, dude. Especially with ICT. Like if you're trading ICT concepts, you fucked up. You did something wrong. You traded outside of kill zone. You traded in seek and destroy. You just randomly pushed the button because you wanted to be in a trade. There's no setup. You did something wrong. And so until you see something that makes sense in your mind that lines up with the bias that's in the market, that is when you sit on the sidelines until you see something like that. That's why I like trading so much because it's all based on your performance, nobody else. Yeah, my family's always believed in me. They've always supported me in like anything I did, which is I'm very lucky to have that. But like I really didn't tell any friends. I really only told my brother and my parents. Like I remember the day like there's this one really like I won't say rich, like really wealthy guy who's in my city that like we're family friends with, and he owns like a bunch of businesses. Like he owns like a Ferrari dealership, owns all this stuff. And like I kind of looked up to him, but I remember I told him what I was trying to do at like a gala dinner we were at, and he was like, what are you doing these days? And I was like, oh, I'm day trading. And this is before I found ICT. And he was like, oh man, you gotta do something different than that. That's just gambling. And I was like, yeah, I mean, I really didn't say anything. I kind of just like in my head was like, yeah, okay, whatever. But like the fact that he was like not like really like didn't think I could do it, I was like, all right, watch. So now here I am. But like I said, like that's just trading is just something you keep to yourself. Like I have friends who ask me like, hey, because they see me, they're like, what do you do? And I tell them, and they're like, how much money you make? I'm like, do you fucking ask like anybody that? Or are you just asking me that? Prop firms 90% off right now. Yeah. Apex, you gotta live, stream more often, man. Yeah, I try and do one once a week if the price action's good. It's just really bad lately, so I've been trying to do it once a week. Yeah, guys, thanks for stopping by. It's getting late here. I'm gonna go ahead and end it here, but feel free to smash the like button if you liked it and subscribe. I know there's about 90 people in here. Let's see if we can get to like 100 likes. We got 69 right now. But if you guys enjoyed it, let me know in the comments, tag me on Twitter, and we will try and do more of these more often, especially when the price action gets good. And they won't be as long as 2 hours. This one kind of just went over because there's a lot of questions. So we will try and keep them short next time. I literally say that every video, but they end up going over longer and longer. So maybe we need to limit it to like a certain time limit and just cut it off by then. And first come, first serve with the questions. So thank you guys for coming, and I will catch you tomorrow.